Weird to watch things move and nobody's saying anything. This is just me getting ready for you guys. The Trading View Titan. I like that. Good morning, Ron C. Good morning, everybody. It's good to see you in here. Hope everybody's doing well. Life is treating you right. You're on the good side of all the things you need to be good on. Let's have some fun today, guys. Let's get through some basic lessons so we can watch the live market, see if the market decides to give us anything that we want today. Before we do that, it's always news. It is forexfactory.com/calendar. And is there anything going on that could make the market go a little crazy? Cattywampus, if you will. And the answer is no. There's no high impact news today. Not going to worry about it. Going to look for my rules to be met. And diddly squat. And then we're going to move on. And we're just going to trade. And we're going to wait for rules. And we're going to be patient. And for those of you that are new, what you're going to do is you're going to learn how to read your indicators today. I think I'm going to make a new slideshow that covers both platforms. But for now, we're going to talk about NinjaTrader first, guys. There are two platforms that Nexgen indicators are available on. We've got NinjaTrader, which is old school, been around for a while. And there's TradingView. Now, they are different, but they are very similar. Both use two charts. Both use higher time frames to guide us. Both use smaller time frames for entry. But because the bar structure is different, guys, there's going to be a couple small differences. So what I'm going to do is we're going to talk about reading indicators first today. We're going to talk about looking at your charts and just understanding what these amazing indicators are telling you. I'm trying to get everything set up here. Excuse me. Chart reading is about 90% of your day. Having trouble hearing, Andy? Yeah, reboot if you can't hear. Of course, you didn't hear that if you can't hear. Guys, about 90% of your day is doing nothing. It's amazing. 90% of your day is sitting on your hands. 90% of your day is just relaxing in this state of mind where you say to yourself, I'm not doing anything until I have an advantage. My money is worth sitting on the sidelines until I have an edge. And reading your indicators identifies the edge. Guys, give me a Y if you can hear me, please. Just so we can see if it's Andy Man or if it's me. We'll get him to reboot. Thank you, guys. But what you'll find is that when you start to get good at reading your indicators, and it doesn't take long if you keep it focused, you'll start understanding some really key concepts. You'll understand where the market is likely to continue. When we say likely to continue, I say we, me and the mouse in my pocket, you will literally be able to pinpoint where the market is most likely to bounce and continue with an already established trend. You'll understand where the market is likely to go. This is going to help you with targets. And you'll understand where the market is likely to stop. And this is my favorite concept. Likely to stop areas are what we call termination conditions. And they're called termination conditions because they can literally terminate a trend. They could stop forward progress. You will know about them before you ever reach them. You will have a recipe to avoid trading directly into them. This classroom is taught from a point of simplicity. This classroom is taught giving you the very basics, giving you the absolute best of the best trade you could ever take with NinjaTrader, and that's what we call a high probability trade. It's a trade that when the rules are met, typically wins, gives the potential to win 70 to 80% of the time. Confidence is a result of success. The memory of success creates confidence is what they tell me. So this is a trade that's going to create that confidence, that's going to give you that success potentially, and is going to put you in a frame of mind where you are focused on advantages every time you look at the chart, because you're going to believe that when they're present, life is good. So the high probability trend trade, we're going to talk NinjaTrader first. I'm going to try and work both platforms in. If it gets confusing, guys, tell me to shut up and do it one at a time. You won't hurt my feelings. Is only 3 rules deep, guys. Your high probability trend trade only takes 3 rules to recognize it. Strong trigger lines is your first rule being met. Strong trigger lines provide the advantage of momentum. And when we talk about momentum, we're talking about a market that is likely to continue in the direction of the trend. We're talking about a market with the power behind it to break those key Fibonacci areas. We're talking about a market that's showing you an advantage that may even cover some of the mistakes that you tend to make as a new user. So momentum is the first advantage, and we get it from rule number 1. Clear path will be your second advantage. That's when none of those termination conditions are present. When the market has not reached an area that has the potential to stop it to create an untradeable bounce. Termination conditions will not sneak up on you. You'll see them long before you get there. You'll have to make the choice to wait for the clear path. Now this is where things get exciting. I'm teaching you one trade, one best of the best trade designed to optimize your chances of success. When you understand momentum, when you can identify that clear path, what you have is your core and your foundation. And from those 2 advantages, you will find an awful lot of ways to make money with the software. Your first way will be with the trend trade entry, guys, and that comes from rule number 3, the advantage of pinpointing right where the market is most likely to bounce and continue in the direction of momentum and your clear path. So it's only 3 rules. We're going to keep it simple. Don't overthink it. It's only 2 charts to make it happen. You've got a large chart. It's a slow moving chart. It's a broad stroke of a brush, guys. It's hard to see change on this big slow chart. But from the most current bar printing, the first bar on the large chart, you'll be able to define direction. You'll see that advantage of momentum, and you'll know whether or not you have a clear path. Your first 2 rules are always met on the large chart. When they are met, we're going to use a small chart to refine that big picture. In the small chart, you will see typically 20 to 30 bars, and this yellow box around the 1 bar is all of these bars on your refinement chart. In a successful trend trade, you will see a retracement, you will see a bounce from an area inside of triggers, and you will see continuation with the large chart advantages. It's the refinement process that will allow you to reduce risk. It's the refinement process that'll get you in typically at the furthest point away from your targets, allowing you to maximize profitability. So it's only 3 rules. They're found on 2 charts, and we use these 2 charts, whether it is TradingView or NinjaTrader, because they really are a representation of who's in charge. I want you to think of your big chart on either platform. This is a large crowd. These are the men and women who control the market, who establish trends, who create momentum. Your small crowd are the fighters. These are the people that give you the pullback, that push you down to your best of the best entry, where they typically fail 70 to 80% of the time, and the large crowd takes back over. That's the large crowd winning, guys. Go with the flow. The next hour, we'll be learning rules. We're going to learn rules for both platforms, where to find them, how to recognize entries. Everybody in the room has the ability to simulate, to post in the room, to ask for help. I would encourage you to embrace that coaching and use it like you are the only person in the room. Be selfish with the time. This is your time to learn. Keep it simple. Keep it focused. We're learning a pattern. That's all it is. We're learning a pattern that you can prove wins more than it loses. I'm going to give everyone in the room a plan. I'm going to give you the TradingView plan. I'm going to give you the NinjaTrader plan. Both of these are labeled KISS plan, the Keep It Simple Sunshine plan. This is the most basic approach to finding success with the software. This is designed to optimize your chances of success. These are the trades that are designed to teach you to read your indicators. These are your stepping stones in your learning journey. Those were just dropped in the room. Please download them, put them in your collection. The next thing I'm going to give you are the trade tracking sheets that go with the platform that you're using. So this is the NinjaTrader one, Nexgen tracking sheet. It has all of your basic rules highlighted in green. what it means to not have them met and read. Over 500 trades from Nexgen users using momentum and path to find a way. There's a place for you to build your plan, and there's a place for you to track your trades. I'm going to encourage you guys to latch onto the trade tracking part of these journals. This is the trading view. It's got all the trades, management, terminations, and then the tracking sheet. Guys, your tracking sheets, both of them, regardless of which platform you're on, have a place for feedback. It's my feedback. It's when you post in my room, I'm going to look at what you did. You're going to tell me what you did. You're going to identify your advantages. You're going to say, this is what I did. This is where I did it. Hey, Mark, could I do it better? Could I read it better? Could I enter better? Could I manage better? And every time you post, you're going to get the feedback. And very often, you're going to see feedback that says, hey, you know what? That was perfect. Everything you did was amazing. Life is incredible. Put that into your trading plan. This is what you're trying to repeat. As a brand new user, you're more likely to get the feedback, hey, you traded directly into a termination condition. I want to make sure you understand how to recognize it. I want to make sure that you understand how to avoid it. You traded without momentum. You didn't have the best of the best. So when you post in my room, guys, regardless of the platform, tell me what you see. Tell me your chart read, and we'll just make sure that you're reading these indicators with the highest level of accuracy so that you can find the biggest level of success with them. But that's going to be our path, guys. You're going to learn, post in the room, simulate, practice. Don't be afraid to make mistakes on simulator. That is the place to make mistakes. And keep it simple, keep it focused. We're going to talk about the indicators real quick. Both time frames, big chart, little chart, will have areas. Areas, for the most part, are just horizontal lines that run across your chart. These areas are divergence highs, it's a magenta line, divergence lows, a cyan line. And these magenta and cyan lines, divergence is a loss of momentum. Every time you see that line, I want you to say, hey, the market lost momentum there. That's going to pay dividends on the second trade that you take. You're going to see Fibonacci resistance, you're going to see Fibonacci support, you're going to see yellow 1-to-1s, and you're going to see a mid-band that runs through the middle, guys. These are areas, these are places that the market may bounce from. On TradingView, you have all of the same areas. The only difference, well, the one that you don't have, TradingView does not have Fibonacci. So most of you have chart prime supply and demand zones. These will, until Fibonacci is available on TradingView, replace your Fibonacci. You'll see support, you'll see resistance. These are areas that can stop the market. Both platforms will have trigger lines. On NinjaTrader, you'll see them as small and large. Small triggers will be solid, large triggers will be dashed. These are just moving averages, guys. You're going to use trigger lines on NinjaTrader to define momentum. You'll use trigger lines on NinjaTrader to define termination conditions. You'll even use them to define entries. Trigger lines are involved in everything you do with the software. The same is true on TradingView, but we will use them a little bit differently. But know the difference between small and large. And just from a size standpoint, it should be a little evident. So let's get into the rules. As I go through the rules, guys, do me a favor. If there's any challenges, if there's a problem, if you need clarity, if you need me to say it a different way, need to say it a second time, just tell me. Go, hey, Mark, let's do that again. Find me a different picture. That one didn't click. And what you're doing when you do that is you're making this a better class. So we're going to break down each rule, guys, one at a time. Large chart needs strong triggers. We want the advantage of momentum. This is the easiest lesson you'll ever get on NinjaTrader. We're going to let the large chart also define direction, guys. If the background is green, it's going up. If it's red, it's going down. How easy is that? The only way Rule 1 could ever be met in an uptrend is if your small and large triggers are green as well. The only way Rule number 1 could ever be met in a downtrend is if your small and large triggers are red as well. And what strong triggers is, guys, it's just a separation between these two moving averages. So when the small triggers are up and above the large triggers and the large triggers are widening, that space right there, that gap between the two, that daylight creeping through, lets me know that I have strong triggers. In a downtrend, when the smalls are below the large, that space between, it lets me know that I have strong triggers. And when I have strong triggers, when you have strong triggers, the odds are favorable for the market to continue in the direction of the trend. When I have strong triggers, this is what I look for to break key Fibonacci areas. When I have strong triggers, I'm going to buy Fibonacci support on a smaller chart. I'm going to sell Fibonacci resistance on a smaller chart. Good morning, Miss Cindy. Strong triggers are hard to stop when you see them on the large chart, but they do fizzle when your small triggers work inside of the large triggers. Guys, this is when they weaken. When they weaken, I want you to say to yourself, dag nabbit, anything can happen up or down. It's no longer odds favorable for the market to continue. It has become a situation where anything can happen, where the market could retrace from nowhere, where key Fibonacci areas are more likely to hold. So for my brand new users in here, I want you to keep it very black and white. It's either separation or it's not. It's either strength or it's weakness. It's either an advantage or it's no advantage present. Is everybody good with that? That's rule number one. It's a one slide endeavor. And you will know rule number one is met on the large chart. There is zero separation between the small and large. Therefore, there is no momentum. But there was right here, and that's what broke all those key areas until they hit that darn blue line. And that darn blue line is what we call a termination condition, guys. And a termination condition can stop the market. Termination condition can create an untradeable bounce. It can even create a reversal in the market. You'll know where they are long before you ever hit them, because termination conditions are where the people in charge are making decisions, guys. These horizontal lines on a large chart, divergence highs, divergence lows, resistance, support, one-to-ones, these are where the large crowd is going to enter and exit and fight one another. So we know about them long before the market gets there. To identify one of these areas as a termination condition, you're going to let the large crowd get there. You're going to let price reach the area. And if you're a note taker, this is a great time to write this down. The first step in identifying a termination condition is allow price to reach the area. If price has not reached the area, that may be a target, not a termination. And then once price gets there, we're done with price. We don't need it anymore. The trigger lines will tell the story. The same way they define momentum, we're going to use trigger lines to define termination conditions. So price reaches these yellow one-to-ones, you're going to count triggers. How many triggers get through the area? Does everybody see that none of my triggers have made it above these yellow one-to-ones? 1, 2, 3, 4 of the trigger lines remain below the yellow one-to-ones. And when this happens, when price reaches the area, none of the triggers break, I want you to assume that the area is going to hold. I want you to say, this is an area that could stop forward progress. This is an area that could create an untradeable bounce. This is an area that could take all of my money if I choose to trade into it. Because rule number 2 is in place, because more often than not, that's exactly what happens. It's not the one time that it breaks, guys, it's the 10 times that it does not. This was the day before Thanksgiving in termination conditions. 36 times. Rule number 2 kept you out of a loser. So the same way one-to-ones held with triggers below, we're going to assume that it's going to happen again here. If 2 of your trigger lines get above the area, both small triggers smash through, you have momentum, you could say, well, this area's got the potential to break, but that's not my best look. This is iffy at best. When 3 triggers break through, this is the second trade on your keep it simple plan. This is what we call a 50-50 trade. And we're using momentum and 3 triggers through to say, hey, this area now has a higher chance of breaking. The breakout is a little more likely. This is my best look to take a trade with the potential to break. But it's still not a clear path. It's still not a high probability scenario, and it won't be until all 4 trigger lines get above the area in question. Once 4 triggers get through the area, guys, the area is broken. It's in the rear view mirror. Resistance behaves as support. Support behaves as resistance. and your path will remain clear until you reach the next area. So let's open up a big chart and let's just, for grins, take a look. Weak triggers right at a divergence high, that's where the retracement comes. Hits a mid-band, large triggers don't follow, that's a mid-band as a termination condition. Comes right back up to a divergence high, triggers don't break, that's your untradeable bounce that would have taken you out of a position, all the way back to support with the triggers above. Sure enough, the market continues up to resistance with weakness. This is where the reversal happens. Are you guys seeing how effective Fibonacci can be? I am talking from resistance. The market continues down, strength breaks Fibonacci areas, and when it reaches Fibonacci support, none of the triggers break. There's your untradeable bounce directly to resistance and all the way down to support with weakness. And guys, give me a Y in the room, please, if you see the reactions from the key areas. Now, it's going to take you about 90 days to believe in rule number 2, to believe that when price reaches an area and the triggers don't break, that it takes away your advantage. It's going to take you about 90 days to stop trading into these areas. This is the most common rule to be broken, because this is the rule that's going to force you into that 90%, that's going to have you sitting on your hands doing absolutely nothing. But here's the cool thing. When you have momentum, when the path is clear, you are going to impart some accuracy into your plan that is overwhelming. It's uncanny, I tell you. And you're going to use a limit order to buy or sell a pullback in an area inside of triggers. That's your whole mouthful for entry. You're going to use a limit order. You're going to wait for the market to come to you, that small crowd fight, and you're going to wait at an area. You're going to let it pull back to you, right to a fib, right to a mid-band, right to a yellow 1-to-1. Because the way areas can stop a trend on a large chart, they can stop that fight on a small chart. But here's the key. You want those areas to be inside of triggers. Triggers are moving averages, and there's a mathematical term called the regression of the mean that says price tends to return to the triggers, and it happens all day long. Close to market open, maybe you should wait after open to find a trade. Anything cool happen on the open? Why don't you watch it a couple times, Victor? Just sit on your hands. See what it does. Watch it. There are two schools of thought on trading the open, guys. Some of you don't care. Patterns are patterns. Rules are rules. If they're met, you'll take it. Sometimes the open is erratic, and other people sit on their hands and do nothing. You'll have to make that decision. You'll have to make your own decision. But one of the things you can do if you're not sure what to do is you can do nothing and watch it and take a couple notes and get a week's worth of information, and then you can make decisions based on what you've seen rather than what you feel. So guys, reversal bar begins that pullback. When everything is up on the large chart, when the momentum is strong, when the path is clear, you're going to wait for your smaller, faster chart to go down. And it's very counterintuitive. You want me to buy the market that's down? Guys, the large chart is up with strength. The reversal bar is the beginning of the small chart fight. It is not your entry. Your trigger lines, large and synthetic. This is the large triggers from the small chart. This is the large triggers from the large chart. Your large and synthetic triggers will define where the retracement is most likely to occur. Somewhere from the top of that line to the bottom of this line is where the market is most likely to retrace. Areas within fibs, mid-bands, and yellow 1-to-1s, this is where the market is most likely to bounce. This is where you are most likely to see the retracement and then the bounce, the continuation, the reversal of that tiny pullback to go with the large chart advantages. So if you do it all at once, the market is going up, you wait for it to go down, the reversal bar begins the pullback, your trigger lines define where the pullback is most likely to go, the areas within define where it's most likely to bounce. Very often, you'll have multiple areas. The rules for the high probability trend trade say activate your limit order at the top of that range, at the closest area to that reversal bar, because remember, your large chart is railing north with nothing in the way to stop it or create a bounce. We're not going to trip over a couple pennies trying to save a few dollars. Any line below the triggers, any area outside of the retracement zone, this is not a part of your window. This is not where the market is most likely to continue. This is where the advantage of rule number 3 is no longer in place. So as soon as price gets below those triggers, guys, you don't know if, when, or where that market is most likely to continue. This is not a part of the entry equation. Advantage is gone. In a downtrend, rules are met on the large chart. You have momentum, the path is clear. So important, guys, that you let the large chart lead the way. On your small chart, wait for the reversal bar. The reversal bar signals the fight, the beginning of the pullback. You can define where it's most likely to go using large and synthetic. Somewhere in that range is where the retracement is most likely to go. Areas within, fibs, mid-bands, yellow 1-to-1s, that's where the market is most likely to bounce. On your spreadsheet, the blue section up top, this is this exact sequence for you, 100%. This is where you can use those ideas for entry. I'm trying to drop those in the room, but it's not letting me. And you can see reversal, identify the trend or the retracement, where it's most likely to bounce. Your limit order goes just below that area, closest to the reversal bar. Anything beyond the triggers is the wrong side of the triggers. And guys, on the wrong side of the triggers, you no longer have an advantage. On the wrong side of the triggers, rule number 3 is no longer in play. When you get to the wrong side of the triggers, you don't know if, when, or where that market is going to continue down. And guys, that's really the high probability trend trade. And because you can identify where the market is most likely to continue, you will understand where the market is most likely, or where your advantage is no longer in play. That's going to be your first stop, guys. Your initial stops will be placed where the market shouldn't go, beyond the triggers, beyond the areas. And you will get your stop hit about 20 to 30% of the time. This is what we call acceptable losses, guys. When those advantages are in play, when you have momentum, when the path is clear, and you get that pullback to an area, this is nothing more than a pattern. This is a pattern that you can prove wins more than it loses. This is a pattern that you can go back and study. When you see all of that momentum on a large chart, when the path is clear, when there's room to targets, guys, and you see this tail, circle it. If that tail lines up with an area inside of favorable large triggers, this is your study tool. This is how you can go back and historically prove that this methodology is effective, that this methodology gives you an edge, gives you an advantage. Trading is about probabilities. And guys, I just dropped that PowerPoint in the room. Just for grins, let's circle a tail on the smaller, faster chart. That one I believe had potential. Let's see what the circle looks like. Oh, there it is. Mid-band, 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 and then continuation down. It's just a pattern. Let's go back here. Strong triggers, potential to break. If I pull back to the small chart and look at that circle, does everybody see? Pull back to the area, right in the retracement zone. Guys, this was yesterday afternoon. I didn't go harvest this picture a year ago hoping you would believe me that the pattern works. Guys, that's it. That's your look. That's your pattern. That's what's going to create success for the brand new user. That's what's going to give you an edge. That's the pattern that you can prove wins more than it loses. That's the pattern that you are going to recognize and capitalize on. Are there any questions about a high probability trend trade? Guys, it is 3 rules on 2 charts. Learn this trade. Learn how to identify those advantages: momentum, path, and entry, guys. Once you can do that and you see all three, you can say you're in the highest probability trade ever. You should be absolutely chomping at the bit and not a care in the world on whether it wins or loses, because you know it's a pattern that you can prove wins more than it loses. When one of your advantages goes away, you put yourself in a medium probability trade. And a medium probability trade is defined as when most of your indicators line up for the trade. However, an issue exists, guys, and let that issue be singular. Your issue for the first trade, the one that I give you rules for, is your clear path will be gone because it won't be broken yet. It'll only be potential. Because it's a medium probability scenario, you'll manage a little more aggressively. You'll take profits a little more assertively. You'll get to break even just a little faster because you know what's against you. Am I cutting out for everybody, guys? No, most of you are good. All right, some of you are having problems. I'm going to suggest a reboot, but not just shut it down. Kill it from, what do they call it? From your task manager, to clear out all running processes of Discord. And hopefully that'll fix it. Task manager, thanks, Victor. And then, guys, if you are missing two of your advantages, you have to call it low probability. And if you call it low probability, is there anyone in the room that is just excited about taking a trade where you have to say it's low probability? I hope not. Some of you will. Some of you will take them amazingly, but you'll do it with your ability to read indicators. When we talk about the highest probability trend trade ever, guys, that is the basis. That is the basis for the best of the best trades you could ever take. Momentum, clear path, pull back to the area inside of triggers. Nexgen has automated a system to take the guesswork out of these entries for you. It's pretty cool. I'm playing on an ATM strategy right now, and I'm going to call it the prop firm beater. I'm trying to find something that reduces drawdown through quicker, faster targets, faster stop movement. So it's a work in progress, but I'm trying to find a way for my kids to be prop firms. So we'll see what happens. Good morning. All right, guys, that is NinjaTrader. The other option is TradingView. And TradingView uses a 15-minute large chart, and it uses a 1-minute small chart. It is still 2 time frames. It is still a big, it is still a small, it is still overall picture and refinement for entry. But because these bars are so slow, because they're so large, there is a different way to read them. So in your TradingView KISS plan, first it reminds you it's a stepping stone in your learning journey. And then, guys, I have adjusted the workspaces to get rid of noise, if you will. To get rid of noise. So your TradingView plan will use 2 time frames. It'll use a 15-minute chart. This is your big slow chart. This is your large crowd. This is your roadmap for key targets, turning points, termination conditions. Because of the size of this chart, I have eliminated the large triggers, guys. I've gotten rid of that noise. I've even gotten rid of background color. The small triggers on this chart will define direction and overall momentum. The relationship of price will help you with management. So when you look at a 15-minute chart, let's make this as big as we possibly can. You're going to do 3 things. So TradingView users, this is your time. NinjaTrader users, don't try to trade your NinjaTrader like TradingView. TradingView users, don't try to trade TradingView like NinjaTrader. The two don't mesh like that. So the first question that you will ask yourself, on the large chart triggers, is it better odds if green in the right position versus red? No, Carla, so those colors I've taken off the chart. Do you see that? Are you saying is it better to go down instead of up or up instead of down? No. Carla, this is futures, which is amazing. We don't care what direction the market is going. The goal is to have the pattern so that you have the edge. And the futures markets go up, they go down. The only thing they don't really do is go sideways, to be honest with you. But check it out, Carla. Look at how much movement, both up and down, there is in the futures markets. You can make money either direction. So it doesn't matter if your candles are red. It doesn't matter if your candles are green. And to be honest with you, if I went through and I made the candles hot pink, it wouldn't change a thing. And if I made the other candles yellow, it wouldn't change a thing. Pretty cool, right? I'm going to leave it like, oh, I canceled. So the colors of the candles are irrelevant. Great question. That was an awesome question. What we're going to do, and I sound like a broken record, is we're going to let the triggers tell the story, Miss Carla. And the first thing you're going to ask is, what direction are your triggers going? Are your triggers going down? Or are they going up? That's the first question, and that's going to be what defines what direction I'm looking for a trade. Now again, disclaimer, you're welcome. No, Carla, and that makes sense, right? Because green is up and up is positive, right? And down is negative. And there's this little brain hitch that goes. But futures, it just doesn't matter. Don't get caught up on colors, guys. I don't teach colors on TradingView. You could make them any color you wanted. Make your charts as pretty as you want them to be. I've seen people do hot pinks and bright yellows and just sunburns on the eyes because that's what appeals to them. Don't get caught up in colors. Is everybody good? Triggers are either down or they're up. You're either looking for short trades or you're looking for long trades. Let the triggers define your direction. Once you define direction, I'm going to blow this up a little bit. Here's my small triggers right here. There are 3 places where the most current price can be trading. You could be left of the small triggers, and whether they're up or down, left side of the small triggers is what we call the strong side. When you are on the strong side of small triggers, this is when the market is most likely to continue up. This is where the market is most likely to continue down. This is where 1 minute areas are most likely to break. So from the strong side of the triggers, this is your best of the best. If the most current price is inside of the triggers, not quite above, not quite below, we call this transition, because it's either transitioning from strong to weak or maybe even weak to strong, but it's neither. And this is where I'm really aware of those 1 minute areas. This is where I'm ready to manage. This is where I don't have the best of the best momentum, but I still can't wait to take a long trade if the rules are met. And then finally, if you are to the right side of the triggers, and again, whether they are down or whether they are up, when you're on the right side of the triggers, the not left side of the triggers, this is the weak side of the triggers, guys. And when I'm on the weak side of the triggers, I'm still only looking for long trades. I'm still only looking for short trades, but I'm going to be hyper aware of any trouble on my 1 minute chart, because that's when these areas are most likely to bounce. So the relationship of the current price to the trigger lines is going to let you know how you need to manage that trade, how assertive you need to be in that trade. And then finally, the same question we ask on NinjaTrader. Do I have room to targets? Have I reached an area? Do I have space to get to something that creates a bounce? So guys, this is your large chart read, and it's in the plan for you. Does that make sense to everybody? So let's go to NinjaTrader, or I'm sorry, to NASDAQ. And I'm just going to take a picture, large chart. Here's my trigger lines. Does everybody see that the trigger lines are down? I'm only looking for short trades. Does that make sense, TradingView users? We'll say smalls down. Only looking for short trades. Now, here's my most current price highlighted. There's 3 options. The left side is strong. Inside is transition. Above those down triggers, the right side of the triggers, that's weak. What do you guys think? Am I strong? Am I transition? Or am I weak? We're just doing a large chart read together to make sure you guys are grasping concepts. Do we need to go through those again? Cool. If you guys don't want to play along, it's totally okay with me. That's your right. If you're not making money every day with the software, you may want to play along. Because all we're doing is chart reading, guys. All we're doing is learning to recognize advantages. All we're doing is giving ourselves the highest chance of success. I see you, Andy. Thank you. All right, I'm going to make this super easy to read. No distractions. This is currently gold. My small triggers are up. And if I draw an imaginary line and extend those triggers out into the distance, I have 3 options, guys. I'm either strong side of the triggers, I'm either transition, whoops, get in there, or I am weak. Best of the best. Get your management hat on. Really get your management hat on. Chariot, absolutely, it's strong. Participation is going to get you guys where you want to be. It really will. So your NASDAQ was smalls down, weak side, and there's a big mid band and a VWAP in the way. No room. That's your large chart read, guys. And you'll do it the same way every time. And look at that. There's your open, right? And look at the motion on the open. That's huge. So once you've decided what direction you're trading, how assertively you need to manage it, and whether or not you have room, you're going to go to the smaller, faster chart if the rules are met, and you're going to look for an entry, guys. And your 1-minute chart defines the immediate strength of the market with the trigger lines. It defines where you're going to enter from. There's 2 trades on this plan. There's what's called a momentum trade. Obviously, it relies on momentum. And then there's what's called a trend trade. And a trend trade is going to come from a mid-band or an area, and your momentum trades will come from areas or HVAs, guys. Trades originate at areas because areas are most likely to create a bounce, regardless of what platform you're on. So there's 2 entry looks on the 1-minute chart. The first entry look is what we call a momentum entry. And this momentum entry is a trade that relies on you being on the strong side of the triggers on your big chart. It relies on you having odds favorable momentum, smalls above the large, separated, space between the small and large triggers. And this is the only trade where you will use a limit order to buy or sell a pullback right at an area, guys. With strong triggers on both charts, with room on both charts, you can put a limit order and wait for them to come get you at an area. This is your momentum style entry. This is not the most common entry, but it does create opportunity for quick moves. Very often, you'll see the small triggers inside of the large. That takes the momentum trade off the table. If your small triggers turn against you, if you have everything going up and your small triggers point down, your job is to wait for a pullback to an area. Trades originate at areas. And then if you're looking for a long trade, You want an up bar, a long bar, a green bar, or whatever color you have it. And you want it to close, to finish, to continue its cycle and go on to the next bar. You want it to close above the small triggers that are down. You want it to close on the weak side of the small triggers, so you're no longer fighting the immediate momentum. So when you look at your plan, there's going to be two entries. You'll see the momentum entry, you'll see the trend trade entry. And the last page of the plan, my friends, is just like the plan for NinjaTrader. There's a checklist for entry, optimizing your chances of success, keeping you focused on the advantages to take the highest probability trades so that you can put yourself in a position to be successful as a new user. So the trend trade, 15-minute is not trading directly into trouble, room to targets. 1 minute is not trading directly into trouble, room to targets. And then you will buy or sell a close on the correct side of the small triggers at the 1 minute mid-band zone or area. In a long trade, it looks like this. Large chart says down, large chart says strong. Whoops, this is the wrong direction. Price pulls back to the mid-band, red bar closes below the small triggers. That's your trend trade short. And your trend trades are gonna look the same regardless of which direction you're going. I reversed my whatchamacallit. Price pulls back, reaches the mid-band, no close above with an up bar, no close above with an up bar, and then finally a close above with the up bar, and that's where the market continues up. Not fighting these triggers, guys, is going to keep you out of a tremendous amount of trouble. Your trading view has a countdown on the 1 minute bar. Here's a picture that I took of an entry this morning. Smalls up, strong side, room to trouble. No reason to get into that market till you get a close on the correct side. This one actually failed, but that was the perfect entry. And guys, the patience keeps you from getting run over by just entering at the area. And that's trading view. Weak side, but you can look and see that there's just nowhere to go. Do you guys see that? Caught inside of a zone. It's the weak side of the triggers. There's no room down to trouble. There's no room up to trouble. Go make a sandwich. That's your pattern. In order to take a short trade, I've got to get below trouble. I've got to get down to areas. And guys, what you're seeing is a market that appears to be struggling both directions. So the path of least resistance to get you where you want to be, learn some simple rules. If you're new with me, learn some simple rules. Learn some very basics. Focus on the basics. Don't be concerned with the money. Be concerned with the process that creates the money. The money tends to follow. Post in the room. I've got 35 people in here. I've got 4 of you that post in this room. I've got 4 of you that are finding success on the daily. If you are not finding success on the daily, if you're trying to figure these patterns out, if you're working through rules, guys, post in the room. Be willing to be vulnerable. Put yourself out there. Show of hands. Who have I seen in the grocery store and made fun of your trades and said, I can't believe you took that trade, you big dummy. Pablo's the only one. Oh, I will. I know where you live now, Victor. Pablo, I've never done it, guys. I've never done it to anybody. Pablo, I'll rip him up on the golf course, but he makes fun of my golf game, so it's okay. Not really. But guys, there is no fear. Nobody here knows you. Nobody knows what you look like, well, unless you have a picture in there, but then they've got to pick you out of a crowd, and nobody looks like their picture anyway. Guys, post in the room. Take advantage of that and keep it simple. So that's my first hour, guys. Every hour, all it is rules. Just rules. How do I recognize patterns? So let's look at NinjaTrader real quick. Did I crash? I didn't. And this is the S&P. And let's look at the most current bar on the large chart. Do I have momentum? The background is green, which means that my smalls and large must also be green. Do you guys see it? Separation between the small and large. Do I have momentum? That's the only thing I'm worried about. Rule number one. Is rule number one met? Victor says yes. Does anyone disagree with Victor? I don't. Victor, you're absolutely right. So when I identify momentum, my next question is, do I have a clear path? Price reached Fibonacci resistance, guys, no matter what color that line is. Price reached the horizontal line on my large chart. My triggers have not gotten above it. Does everybody see? This is a termination condition. This is an area that could stop the market. This is an area that could create an untradeable bounce. This is an area that could pull money right out of my account should I decide to trade directly into it. At this point, you can stop looking. At this point, you can say, oh, damn it, I'm in that 90%. There's nothing to do. I don't have what I need on the large chart to look for an entry. And I want you guys to see what's happened inside of this one bar. That is the entire fight inside of that one bar, right at a termination condition, guys. If the rules aren't met here, it's okay to not look for an entry. That is going to be your biggest bacon saver. Price reached Fibonacci support. You don't have to lose these trades. You just have to believe that these areas can stop the market. Auto system in a choppy, not perfect market has not produced a signal, because the signals for the auto system are based on the absolute best of the best look. And if it's not there, guys, all of you that bought the auto system, don't get pissed off when it doesn't give you trades and rules aren't met. All right, this is kind of a tricky one. Do we consider pin or green HVA lines? Oh, pink or green. Victor, they are an area that could create a bounce. But the HVA lines, Victor, are used for that bounce when the rules are met. So you might get paid at one, right? But they're typically not trend stoppers. If the rules aren't met, if you have everything screaming up and a pink line's in your way, it's just a pink line. No rules are met for it to hold. Does that make sense? The same way that if I don't have momentum down, if I don't have a clear path, a mid-band in the retracement zone is not a problem for me to create a bounce down. My rules aren't met. It hasn't fit the description for a short trade. So good question. So guys, let's look at this. This is crude oil. Price reached resistance, none of the triggers broke, and look what happened. Down it goes. Small triggers are down and large triggers are up. Do I have odds favorable momentum, guys? Do I have strong triggers with unmatching colors? The trend is down, the large are up, the small are below them. Guys, there's no momentum here. This is a crazy moment of indecision. And look at this. No triggers above resistance. No triggers below support. You are caught in a glass box of emotion without the advantage of momentum. Guys, it's okay to let it break. It's okay to let the market take you to a spot where you can say, I have momentum path and entry, because that's where your edge lies. Does that make sense, everybody? Really quiet class today. You guys are either confused as hell or everybody's brilliant. If you're confused, let me know. I'll fix it. If you're just brilliant, help me out. I'm not. Strong triggers down. Strong side of the triggers. Absolutely nowhere to go. No room to targets. No room to make any money. I'm not looking for a trade. Small triggers up. Transition on the triggers. Absolutely nowhere to go. Dag nabbit. 90% of your day. Strong smalls up, strong side of the smalls, only a couple ticks to potentially get to that outer band, and the 1 minute chart says your small triggers have rolled against you. which means you need to pull back to an area to look for continuation up. So it's the same thing, guys. It's rinse and repeat every day. The rest of the day is going to be spent looking at the charts you post. The rest of the day is going to be spent reading the large chart, looking for entries on the small chart if they're present, looking at your charts and deciding if you follow the rules, giving feedback. Guys, if the rules are met for the TradingView KISS plan, we'll pull the trigger in the room. If the rules are met for the KISS plan on NinjaTrader, we'll pull the triggers in the room. Education. Andy, you're just a third and last generation logger learning how to fall candles and log them for profit. I like that. I do love the metaphors. So guys, go stretch your legs. First hour's over. I'll leave you with crude oil. We'll see if they break out of a range. When I come back, this is your classroom. If you have a need, drop it in the room. We'll take care of it. I'll see you in about 5 minutes. Miss Jen, can you hear me now? Thank you, HCC, for the heads up there. You can. Awesome. So guys, they're still trying to figure it out, aren't they? They're still trying to decide what they want to do. Let's let them decide. Look at that. No triggers through. Huge bounce directly to support. And now from support, huge bounce. Avoidable losers, guys. I can't stress that enough. Avoidable losers are amazing. Rockrow, head over to Traders Chat. If you have questions about the Auto Trader and you post them over in Traders Chat, John Novak monitors it, and there's a lot of people that are using the Auto Trader, and there's a lot of people testing. A lot of people testing their Auto Traders over there, talking about different ATM strategies, talking about different stuff like that. So there's the link to Traders Chat. Head on over there. You can ask questions, and you can get a pretty good idea of what's going on. You're welcome. Did I ever mention that 90% of your day is doing nothing? Guys, there's a lot of nothing going on. So I'm going to scroll up, and we're going to look at charts that have been posted, and we're going to talk about them from the vantage point of momentum and path and entry. So we're going to start with Pete. And we're going to see what's going on. And we're not going to rip Pete apart. And we're not going to play trade police, guys. What we're going to do is every chart we're going to look at from a vantage point of momentum, path, and entry. Momentum, path, and entry. So on this particular trade, does everybody see that the small triggers are inside of the large triggers? And let's do this. And I'm going to put the disclaimer out there. And guys, I got to put the disclaimer out there. Everybody in this room is at a different spot. Everybody in this room is at a different plan. Everybody in this room has the ability to read indicators and may see things differently and may be trading a different plan. So when you look at Pete's chart and you say, oh my gosh, he doesn't have momentum, don't worry about it. It's Pete's trade, right? We're just identifying advantages. But what Pete recognizes is maybe Pete 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 is 30 plus bars in the same direction. And 30 plus bars in the same direction is how we define a strong trending market. And when you have 30 bars without a reversal bar, yeah, you'd think I would be able to just look and see by now. The assumption of momentum is there. In a strong trending market, 30 plus bars, you can say the momentum is good. And that's exactly what he has. Now, the challenge here is an entry at 94 happens right here. And there is decidedly not a clear path. Not even a little bit. It's got a couple triggers through, and we're really kind of hoping things break. So, does everybody see that the path is not clear? Pete says he has a clear path to the target. I disagree. There's a big fib that hasn't broken, and even your entry is a momentum style trade without momentum. So let's talk about what Pete sees, because it doesn't fit the high probability trend trade. But what Pete sees, and I love to do this because this is where all of you are headed. Stop that. Pete sees a strong trending market. Pete also sees room to the next trouble in a strong trending market. And I want you to see how Pete has every indicator on his chart pointing up. Every indicator on every chart is pointing up. Pete gets a little snap back to those small triggers, which are also pointing up. And guys, that's a momentum style entry. And that's exactly what Pete does to ride that wave up to trouble. Guys, this is a beautiful trade that looks completely unorthodox to the brand new user. But with a little bit of time in the seat, time on the pond, as Pete says, you'll start to recognize these patterns. You'll start to see these pushes. And from a very basic understanding of how to read your charts, you will find more opportunities to make money. Nicely done, Pete. And the same is true here. When that termination condition that he traded to reversed the market and produced momentum, once again, Pete makes the decision to trade without a clear path, relying on momentum to push the market. And it does. And he makes money on the way down. Nicely done. Now, you have to ask yourself, is trading into areas that could stop the market the path of least resistance to get to where you want to be? It's not if you're a brand new user. Pete knows exactly what he's getting into, and he accepts that risk based on his bigger chart read. Nicely done, Pete. Don't ever want to be the trade police. Quick base hit, no momentum, but path and entry. So 2 out of 3. I love that you did that, Pete. That's the perfect annotation. Because what does it tell me? It says Pete has recognized 2 out of 3 advantages, and therefore he'll manage assertively in a medium probability scenario, and that's exactly what he does. Pete, outstanding trading this morning. Outstanding trading this morning. Great chart reads, great execution that suits your needs. And it's just hard to argue with results, guys. Hard to argue with results. Victor says, Mark, check it out. My small triggers are up. I'm on the strong side of the small triggers. I'm above trouble and I've got nothing but room to trouble. Does everybody see that large chart read? Victor doesn't jump in. Victor says, you know what? My small triggers turned against me. I'm going to wait for the pullback to areas. But I'm not just going to jump in at areas because that's silly. I'm going to wait for a close on the correct side of the small triggers. Victor, you get in. You get paid at the first sign of trouble. Hey, there's something in the way. Let me make some money. And then ultimately, this trade does go to the outer bands, exactly where we would expect a trend trade to go on the smaller, faster chart. And that's when the shenanigans hit, right, Victor? The second half of that trade is, Victor, you managed out a little assertively. You started protecting your position a little soon. And it does go right to where we would expect it to go. And guys, that's one of the patterns that you'll recognize. Outer bands can create bounces. They're great first targets in trend trades. And you have to be ready for a retracement there, guys. And that's exactly what it did. It pulled all the way back to the mid-band and ultimately failed. But what happens as you grow with the software, you start tuning out the sideways on the small chart because of the advantages on the large chart. And Victor, you did a good job protecting your position. And it looks like they would have come and got you anyway at break even. But this is one of those things where the more time you spend with the software, guys, the clearer the big picture becomes. And you'll find ways to hold for bigger moves. You'll find ways to capture profits. And you'll begin to recognize the patterns and exactly where that market is likely to go. And that's the phrase that we use every morning. Where the market is likely to go is a great place for targets. Nicely done, Victor. Thank you for sharing that one. But you were protected. I've never been mad about winning a trade. I pretend to get upset. Oh, dang it, I only made $400 on this one. I'm so pissed off, I could have made $1,000. Sorry. Guys, if you're mad about a $300 or $400 trade, that's amazing. That means you know that there's so much more potential in the market, but you're still getting paid, and that's the goal. Andy Man says, check it out, Mark. All the momentum, 3 triggers through, pull back to the area inside of triggers, egads and little fishes. This is a pattern that I can predict. This is a pattern that I can recognize. This is a pattern that I can capitalize on. And it only took 3 charts and 2 rules. Beautiful. And now the other Andy. We are Andy heavy in this room. Let's see what happened here. Triggers down, strong side of triggers, room to the midband, cleared trouble. This is the perfect chart read. This chart says we're going down strong, let's find a way to go down with it. Andy waits for the pullback, right to the 1-to-1s, right to the VWAP. He gets in on the close on the correct side of the small triggers and rides that thing all the way down to the outer band. Andy, this is a beautiful trade. I actually think I took the same trade yesterday in the afternoon. Absolutely gorgeous. Perfect read, perfect entry, awesome targets. Easy $430, right? Just so you guys know, we're going to make you famous on Instagram. Miss Savannah is building little movies for people to watch about trading Nexgen. Your winners are going to show up in those movies. Perfectly done, Andy. And now this one, triggers are up, strong side, prices through the 1-to-1s, room to trouble. Perfect read once again. Andy, you take the close on the correct side of the small triggers, and it doubled you up on contracts. I've had that happen before. And, oh no, here's yours right here, 47.50. And you take all 4 off at 50, which doesn't seem like a lot, but on 4 contracts, that's a $240 trade. Nicely done, Andy V. Perfect large chart reads, perfect small chart entries. Have you guys noticed that trading seems a lot less stressful when you follow a checklist? That trading doesn't seem as difficult as it once did, with a couple basic concepts and a little focus on advantages? I've noticed. I just don't have stress in my life anymore when I trade. I used to, because I was worried about what the market was going to do. Now I don't care what the market's going to do. The market does the same thing every day. I just have to trade the patterns. Andy, you knew this would happen because you have a magic 8 ball. After it went way down, it would go right back up. Of course, there's no way to know. It's just a big drop, right? Strong side of the triggers, room to target. You sold on the way down, hit your target, and then they just dropped. That happens sometimes, guys. That's the magical phrase, not my money. You made your money. The rest of it belonged to someone else. Beautiful trade, though, Andy. Great job waiting for everything to line up, and you found a way with momentum and path. Pete. Strong triggers. 28. Not at all a clear path, not even the potential to break. But with all the momentum, Pete trades directly into a termination condition and manages to make money up to the next one, right? Pete knew what he was in for. He had room to get to trouble, and when it didn't blink, he just kept making money. Hey, what's going on, Master B? Welcome to Nexgen. It's great to have you, man. Pete, nice trade. Momentum and path, right? Lost NPC. Hey, Mark, I keep hearing you in my head saying pull back to an area or a zone inside of large triggers. However, I can't find anything that ties that particular trade type. Which trade does that look belong to? All right, so Miss Shannon, what you have done is you have created this bastard love child between the two platforms. So the first rule, it's okay. So what you're thinking of with that language is a pullback to an area inside of triggers. That's your ninja trader. That's not your trade. Does that make sense? That language belongs to the ninja trader, trend trade. Now, your language for the platform that you're on, this is totally normal too, by the way. Your language is when the small triggers roll, you're going to pull back to an area, and then your job on TradingView, Shannon, is to wait for that close on the correct side of the small triggers. Not buy the area on a pullback, but rather wait for it to get to the weak side of the triggers, and that's typically where the movement begins. And that's one of the reasons why teaching a class with two platforms, this is where you guys have to ask these questions. It's a great question. Does that make sense? Okay, cool. Yes, sir. Don't you do that. You're so welcome. I love those questions, guys. Those are normal questions. Those are the questions everybody has. Not everybody's brave enough to ask. Let's see where we're at. Bum, 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 bum. I like sound effects, just so you guys know. All right, Boaz. Let's see what you did, my friend. Boaz says, check it out, Mark. I've got all the strength and 3 triggers through, and there's my pullback to the area inside of triggers, Boaz. Late entry, but with all the advantages, you take it right up to trouble. And I'm going to use this as a great example, guys. When you see a divergence high, when you see a red line, it's okay to get paid there. And Boaz, you gave it a chance to break if it wanted to break. But look at where he exited, 55.75. He exited 2 ticks. 2 ticks. Absolutely beautiful. And then let the second one run. You've already been paid. Nicely done, Boaz. Great looking trade. All right, Master B, let's see. A lot going on these charts, right? You roll with big triggers and follow through with small chart to targets. All right. So big chart said down. Big chart had momentum. And you rode that momentum and clear path all the way to trouble? And then everything says up with momentum and you bought? Oh, is that your close from this one? Is 832.50? No, that's way up here. Cool. You've got all sorts of stuff going on. Okay, so you bought the market and then you exited at trouble? Master B, welcome to Nexgen. Trading with trend, with momentum, room to targets. Trading with momentum, with trend, room to targets. You've got a lot of stuff on your charts here. You want me to let you in on a secret? Might make them easier to read. So, you're clearly not a novice, right? MACDs, momentum indicator. Is that what you're using them for? Cool. So check this out, Master B. Your MACDs are being used by the software behind the scenes to let you know when there's a loss of momentum in the move. And then your trigger lines are giving you the visual that MACDs give you, separation from that Bollinger Band. So one of the things John Novak has done, and MACDs used to be a big part of what we did before we had the trigger lines, before we had the divergences. So if you were so inclined, you could lose your MACD indicator and know that the software is working it for you. Growing away from them, see, yeah, it's scary to do something different. What is this indicator? I don't recognize it. Some sort of oscillator, right? Maybe. This is a MACD as well, both of them? Okay, it says MACD right there. So you're doubling up on your MACD. Which one do you believe? Top or bottom? Or do you use them together? You believe the top? Right on. I like it. I don't ever tell you guys to change what you're doing, right? A lot of times you guys are so comfortable with the indicators that you have. I don't want you to get rid of them if they're helping, right? The cool thing is, and one thing that I'd love to see from you if you didn't mind, show me your entries over here on your small chart So when you take a picture, and let's just say hypothetically, I went short right here, and I'm not saying that it's a trade. Show me where you went short over here as well. And what I can do, and what I will do, is we'll compare what's happening on this chart to the rules being met on this chart. We'll make sure that you got the best possible entry, make sure that you have the least amount of risk. And this is one of the ways that I love to help you guys. If I have all of the information, I can give you the absolute best feedback. Was that trade from this morning in the NASDAQ? I'm going to open up my NASDAQ real quick. Just now? Right on. Pete says less is more. I'm just, Master B, we've never met. I am the most artsy-fartsy dude you'll ever meet. I am so right-brained that that less is definitely more for me. You're a lefty. My wife is a left side brain. When I was working on my English Lit degree, you'll appreciate this. She's like, why don't you read something useful like a manual? Like, because it's not the same as Shakespeare. So I'm going to try to line up what you did and see if we can't put the two charts together. 23,780 directly into fibs, 23,780. So that was your bounce right there. I'm trying to line this up because I think it would be fun to see what you did by at 94 flat is where you bought, which I am going to say is right there probably, possibly. And if I come back to your small chart, it pulls right back, and it does go a lot higher before it goes down. That may not have been your entry. Hard to line these up. There we go. So you just jumped in. Right into trouble, huh? You just jumped in right into trouble. So this is, I love this. Let me show you something cool. This trade is outstanding. This is a trade that was actually, the idea for it was developed by a gentleman in this room. And it says when everything is strong and you have room to trouble, find a way to get paid. You killed it. Now this one, you see how you just don't have anywhere to go? It's okay to skip that one. It's okay to say, you know what? I don't have to trade directly into lines. So as you get more accustomed to the software, and as you begin to trust it a little bit and believe that these areas can stop the market, what happens is you'll start having, oh really? Would have kept shorting, not waiting? That's typically what the software does for people, is it creates patience, because the market moves in patterns. That's all it does, is it just moves in patterns. And when your patterns are there, capitalize. And when they're not, sit on your hands and do nothing, right? Great job. Keep them coming, man. Keep them coming. But it's pretty cool because you know where the market could stop, right? You know where the market can bounce. So all we have to do, and this takes a little bit of study and a little bit of time and a lot of trust through the study, is you'll realize that when you have momentum and absolutely nothing in the way, it's the easiest trades that you'll ever take. It's unbelievable how stress-free trading can be if you really hang on to those first two advantages of momentum and path. And then you'll be floored at how often you will find a way. We were having a conversation the other day in classroom. I can't be behind something that I don't believe in. Guys, there's no doubt in my mind what we do is amazing. There's no doubt in my mind Fibonacci keeps you out of trouble. There's no doubt in my mind that momentum pushes a market. And you can see it right here. directly into a termination condition, and no matter how pretty your entry is, you got run over, and you knew that that was most likely to happen. And 90% of your day, dang it all to heck, I think I just closed out my large chart. 90% of your day is staying away from problems. 90% of your day is sitting on your hands. And this was, have to learn watching that small chart. Well, the cool thing is you could do this. You could have a big chart from C to shining C. You could have a big chart and never even look at the small chart until the large chart says go, until the large chart gives you momentum, until the large chart gives you that clear path. And then when the large chart finally says, hey, let's go look for an entry, that's when you can turn your attention. And that one phrase, pull back to an area inside of triggers, will give you everything you need. It's almost too easy, but it's not. You've got to learn patterns. I had a gentleman call me once. We don't have any more pictures to look at, guys, and the market is caught in areas. I had a gentleman call me once. One of the client advisors says, hey, I need you to talk to this guy. He's confused. And I said, I'd be glad to. I'd be glad to talk to that person. And he goes, Mark, I've been trading for a long time. And of course in my head I'm going, well, you haven't been doing it well because here we are. He goes, 3 rules is not enough. 3 rules isn't enough rules to be a successful trader. 2 charts is not enough information to find success. And I respectfully disagree. I respectfully disagree, guys. Whether it is NinjaTrader, whether it is TradingView, these 2 charts, even more specifically, this one large chart, tells me, dude, you're caught in a range. Sit on your hands. Go play golf today. Go play pickleball if that's your thing, right? Go to the casino. Wait for it to break out. Wait to get what you need. And then when you get what you need, have your study done so that you don't hesitate. When you get what you need, make sure that you've done your research, that you understand the idea of momentum. And guys, watch this. Before the market ever even pulls back, I can use the language, areas inside of triggers, to predict where the market is most likely to bounce and continue down, if it's going to bounce and continue down. Already called my shot. Momentum is strong. How many trigger lines are through trouble? Can you guys do the counting trigger thing? This is my favorite. Markets have been, haven't they, Bank Vault? They definitely have. Does everybody see that there's only 2 triggers through the areas? And while this is the potential to break, I have to believe that it's not my best look, but it's still a good look. Divergence on a small chart could absolutely kill this look. Coming from a termination helps it. If I enter, oh, that's market if touched, I didn't mean to. If I enter below the area inside of triggers, my stop will have to go 4 or 5 ticks above the triggers where the market shouldn't go. The one thing that I can't control is whether or not they come get me. And so far they haven't. You work off of your 60-minute, 15-minute opens for strong support areas and look to your Nexgen turns. I love it. I love it. You have a plan, right, Master B? You know exactly where to find it. You know exactly what you're looking for. And now you're using Nexgen to refine your entries. Guys, that's what successful day traders do. They know exactly what they're looking for. They know exactly where they're looking for it. And they sit on their hands when it doesn't happen. Does everybody see strong? Only 2 triggers, not the best look. But it's still potential. Coming from a strong top. No divergence on the small chart, strong triggers on the small chart, lowest point of resistance inside of triggers. I don't typically do a market if touch. There we go. And I'm waiting like a sniper. Doesn't guarantee a win, guys. It's only the potential to break. This is a medium probability scenario. But this is how you will be able to time out your entries. There it is. Uh-oh, I didn't have an ATM strategy. Sell. So I have to buy a stop market 4 to 5 ticks above. 56, I will buy limit 1. That's a $100 profit. And then from 04 to 02 is my $200 profit. This management is in the KISS plan, guys. If I get a reversal bar, my new stop is 2 ticks below that reversal bar. If I hit my first target, my new stop is break even, and we're going to see what happens. And until one of those happens, there's nothing for me to do. It's only the potential to break, guys. My stop is where the market should not go. It's 100% the job of the sellers to push this market down. I can't do anything else. Does that make sense, everybody? All I need is 3 ticks. Oh, it hit it and didn't fill. There we go. Your KISS plan says go break even when the first target is hit. Whoops, we only had 1 target in. Second target would have been 02. Guys, that is the plan. How's that for a sniper entry? People ask me, hey Mark, does the software work? Damn right it does. You just got to learn how to work it. Pretty cool, right, Master B? It's fun when I can do that live in front of you. It's fun when I can say, hey, the rules are met. Let's take a trade. I didn't have an ATM strategy in play, though. So that was my mistake. That was my mistake. And be very patient, Shannon. You're married to Josh. You know that. For those of you that don't know, Shannon's my sister-in-law. When you believe in the system enough to teach your family how to use it, guys, that says something, doesn't it? And guys, that was your $200 target right there. Are these preset buys and stops? They're not. Sword Trader, you have to make the decision through your analysis to enter the market. Now, when you enter the market, you can have what we call an ATM strategy, automated trade management. So you can have a strategy that tells you where your stop loss will be so that you can put it in the right place, yeah, and where your profits will be. And guys, it still hasn't stopped, and it made it all the way to trouble. And from 06 flat to 5 flat, or 00 flat, that's 6 points. That's $300 per contract. I didn't have my ATM strategy in, so I had to suffer through $200. Poor me. Woe is me. You do the ATM, Sword? Right on. Isn't that cool, though? Momentum first, potential to break, define your entry, make money. That's the plan. Yeah, Master B, counting triggers is something that John, like we'd always talked about 2 triggers through his potential. And then John and I were doing some study, and John Novak has this symptom, this disease, happy but never satisfied. And he's always looking for a way to make things better for you guys. And the 3 trigger through actually became a better look for these potential to breaks. And we're like, wait a minute, we have to start counting triggers. And it worked out. I'm cutting in and out. Am I cutting in and out for everybody? Guys, here, I'll reboot mine real quick. It seems to be sporadic for all of you guys. Let's see if it'll let me kill. I'll be back in 1 second. Boink. Coming back. Don't y'all fear none. Dun, 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 dun. Can you hear me? Can you hear me now? Ta-da! And it's still going, guys. Hasn't even blinked. Or blunked. Is it blunked? Hasn't blinked? Hasn't blunked? Where's it going? You think they're looking for 64, 94, 78? I'm telling you, these guys know about the fibs. They know they're there. When John Novak created the algorithm for the software, he had a buddy in the pits in Chicago, and that buddy's job was to know where business is being done. And when John would send him his fib numbers every morning, John got to the point to where he was within 50 cents. That's when Nexgen was born, nearly 30 years ago. There we go. They made it. Weakness in the triggers. Let's see if they react or if they're excited about the breakout from consolidation and choose to go lower. Guys, you have not had a small chart exit condition yet. Love it. Auto Trader did not find an entry in there because it doesn't have strong triggers. There's the NASDAQ cranking down. There's crude oil, 2 triggers through. Divergence prints. Divergence is one of the biggest killers of the potential to break. Taking Evil Cat to the vet for shots. It's going to be pissed off Evil Cat pretty soon, Victor. All right, let's go look at TradingView. There's your move, right? Small triggers down. Strong side of the small triggers. We are outside. Was there an entry? That was a pullback. That was a close below right there, but that was right into trouble. That didn't qualify. Straight line run did not give me an entry. You want to see the breakout? I think the cool thing, Master B, isn't the breakout of consolidation, but rather, and I like to say but rather, the idea that you could see 100% where the consolidation was occurring. You could see 100% when it had the potential to break out. You could see 100% where the sellers took control and created the best momentum. All you had to do was trust your entry. No entry, Jen. And then it's rinse and repeat. It's do the same thing every day because the same thing every day has been proven to provide you results. So let's do this real quick. This is an important part of what we do. This is the client trades from the spreadsheet. I want you guys to see something. I want you guys to see something. It's important to me that I put this out there. Does everybody see strong triggers? Does everybody see 4 triggers above trouble? Tons of room to the next area? Momentum and path, right? Perfect. Does everybody see the ideal pullback directly to an area inside of triggers? Like a rock star. 100% rules met. 100% highest probability trend trade you could ever take. 100% best of the best. Now here's my final question. Does everybody see that David lost? Does everybody see that that is a losing trade? That is a money out of the account. Do not pass go. Do not collect $200. Your trade failed. Does everybody see that? But it had momentum, right? And it had a clear path. And it had an entry area. Guys, you have to remind yourself that anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. It does not make it a bad trade. It does not make you a bad trader. It's a cost of doing business. And I am so sold on the idea that I will never know what's going to happen next that I'm willing to put that pattern. I'm willing to put that pattern into the spreadsheet that I give you guys to study. Here's another one. Perfect, doesn't work. Odds favorable, clear path, perfect entry, run over. Tiny little loss on the perfect trade. It happens. It will happen. I typically run around 60% winners. Some days I can't pull my head out of my ass and I'm at 40% winners, but I still find a way to make money with good management. I've seen people run 30% winners and still make money with good management. So yeah, every 10 trades, you should just plan on losing 2 or 3 of them. And then what do we have now? We have weak triggers, but we do have a clear path. We don't have any areas inside of triggers. And once I get to the wrong side of the triggers, I don't know if, when, or where the market's going to continue down. It's not a high probability scenario. I'm missing 2 out of 3. All right, question. Not sure if this is me or not, but my current TV chart is showing up with all these lines just overly busy. So sword trader, are you familiar with supply and demand? Is everybody? Not everybody is. I wasn't until recently, so I don't assume anybody understands this. Supply and demand is very much a reflection of what has happened in the market, right, sword trader? So when your market consolidates like this, you're going to see a lot more of those areas, sword trader, in times of consolidation, because they update pretty quick. That is where you are going to really rely on the idea that from the strong side of the triggers, they're more likely to break. And you'll be a little looser on your management when you know that those are a product of consolidation. Does that make sense? Onofrio, I'm glad you found time. Let's see what you did. Other than make it hard for me to read, let's see where we're at. Boom, 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 boom. All right. Dun, dun, dun. So I'm going to do this. In Onofrio, this is how the classroom works. And we'll go back to the results as well before it's all over. For my brand new users, I love the idea that your perfect trade involves momentum, a clear path, and an entry area. That's the best of the best. Well, one thing that you had, my friend, was a strong trending market. 30 plus bars in the same direction. Because of that, we are granted momentum immunity. You have a strong trending market, and therefore, we're going to say that the momentum is there. You had all of your triggers below Fibonacci, and you hadn't reached the next Fibonacci area. You did, in fact, have a clear path. So right now, you're batting 1,000. And here's the cool thing, is you sold a pullback to an area inside of triggers, the absolute, whoops, wrong one, the perfect entry as described by rule number 3. And let's see what it did. From that point, the market continues down. And when you get to the wrong side of the small triggers, a loss of momentum, you decide to get paid. Onofrio, it's beautiful. Strong trending market, clear path, pull back to the area inside of triggers, get paid. And that was 3 points and almost 6 points total. Any questions? But you guys see how I didn't have to really do anything other than, hey, let's see if it's the best of the best. And it was. And I'll be damned, it produced results. Wash, rinse, repeat, right? Onofrio, outstanding. Great first trade. Great first trade. Did anybody else catch that one? That was it. Boom, and donk, right down. When price retraced to the fib and all the triggers were below, the market was more likely to continue down. And sure enough, it is. When support breaks, it behaves as resistance. And guys, look at this. Where did they pull back to? There's a couple people that use the software that when everything is below an area, they'll enter with a reversal bar at the area because the area is more likely to hold. And that is the basic language from rule number 2 that starts to add to the ability bank for you guys. Miss Jen, outer band, term reached. Whew, and you said, F it, I'm going long. Small's not above large. Breakout bar up. Did it open above the HVA line? Because if I'm not mistaken, there's your up bar, there's your HVA line. So you catch it at the HVA a little late and take it up to trouble. Nice. Master B, thanks for being here, man. Keep doing it. Keep posting. Keep asking questions. It's just a process. Jen, it is aggressive as all get out, but done perfectly. You are more likely to get run the fudge over than you are to win this look. But if you were going to take a chance, you did it the best way possible to see if that outer band was going to stop the market. Nicely done. And for me personally, and this is just me interjecting, Jen, this is my 2 cents. It's worth exactly what you paid for it, which is nothing. I love outer bands for targets. I love outer bands for fluctuations. If I'm really going to go counter trend, I want a zone. I want 1-to-1s. I want a divergence low. I want something other than just a moving average floating, right? That's just me personally. I love an outer band. I'll take targets there all day long, but I just don't believe these are my reversal points. I like areas, and I feel like it creates a much higher degree of success. If I'm going to go counter, I want something solid beneath me. And that's just me. That's my own personal. Look at that. Nothing inside of triggers, and now it's pushing up. Weird, Jen. I've never been angry after a one-way move. Oh my gosh. I hope all of you read that and realize that you're not alone in the way you think. That's exactly what our brain does. All right, Paul, let's see what you did, my friend. 15 minutes, short, so it's down. You are strong side, Paul. Do you recognize you are, if you draw your imaginary line, you are 100% strong side of those triggers. You had room back to the outer band. And you just jump in. With all the momentum, you just jump in. Is that fair? 73.50, 73.50. Just jump the fudge in. Everything is screaming. Triggers are down. You're not fighting them. You let it get below trouble. You had room to trouble. And you said, with all this momentum and nothing in the way, I'm going down with it. And you did. And you got paid. I don't disagree with the trade at all. I don't teach it. But with every advantage and nothing in the way, and everything screaming down, Paul, your brain said, egads and little fishes, let's go down with it. Not quite the continuation concept that I posted a picture of the other day. But you had room, you had at least $100 room before you even hit anything. And with all those advantages, it just keeps screaming. Just wanted to make sure that you knew that it wasn't the same thing. Told you guys, when you understand momentum and path, you will find a way. When you recognize momentum and path, you will find a way. Good job, guys. Good job. There's your retracement. You guys want to learn a pattern? Good job. When the market is screaming down like that, and this retracement comes from the middle of nowhere. Do you see it? Weak triggers, pulls back up. Very often, long trades are ill-fated, and they're trying to get to that next fib. Termination, large triggers don't follow. They'll make decisions right around 64.92, and this is where we will know whether or not the buyers are done letting the sellers go down, or if the sellers had their sights on that key Fibonacci area. This is a pattern. This is a weak bottom, and a weak bottom means that there is no termination condition that creates the reversal, and the market very often continues in the direction of the trend from key Fibonacci areas. You'll notice that you have no room, termination. This is also a termination. And the large triggers are a full bar away. Price returns to the large triggers very often. Let's see what happens with it. We'll come back to it. What do you guys want to talk about? Nothing over here. There's NASDAQ with all the fibs, right? Pulls back to support. Large triggers are up here, nowhere to go down. Only the potential to break up here that didn't. We'll see what it does. Small triggers are down. Strong side of the small triggers, nowhere to go yet, right into that outer band. But look what's happening. Fight, fight, fight. Larger up, smaller above them. This is where if I were going to look for a short trade, I would need an area like a mid-band. And then I would need a close below the small triggers to have my rules met. Miss Jen. Whoops. Small triggers up. Transition side of the triggers. Late entry? Or did you get in when it broke above the zone? 48.75. You let it break above the zone so you wouldn't trade right into it. Managed to make a little bit of money. Hold your position because you have everything protecting you. And then out of trouble. Really nicely done, Miss Jen. Really nicely done. I like that you said, I don't want to trade directly into it, but when it breaks up, did you also notice, and this is kind of the pattern I've been looking at, Jen, did you also notice that you are not fighting small triggers, that they're in the direction of your trend now? I've been using this pattern, and I'll show you, I think I posted the picture yesterday. I take so many pictures. Let's see if I can find it. Organic, you have to buy them. Give me 1 second, I'll get you over there. Maybe this was it. So Jen, this was it right here. This is one that I've been working on and just studying. So the entry for this short was up top, right? Everything is down, checking it out. And I'm like, it didn't give it to me. I didn't have room. It's just not from an area. And then when I break and pull back, everything is down. I'm not waiting for the close on the correct side of the triggers. I'm just waiting to get below the zone. And I think that's exactly what you did, and you did it beautifully. I've been studying this one. So if you study it too, feel free to share your findings. There's so many ways to trade. All right, so organic, the zones that I use and that most of the people in the room use are chart prime, and you don't need the expensive one. You can do the cheaper of the two, and they've got a 20% off. They are, the triggers tell the story, Jen, they always do. That's what most people are using organic. John Novak is trying to get fibs to push onto TradingView. The programmers haven't been successful yet. This is amazing. I think it's worth every penny personally. And again, my opinion is worth exactly what you pay for it. But these areas are outstanding. All it is supply and demand. That's it. All right. Small triggers down, right? Transition to weak side. If I got a close on the correct side of the triggers here, this dotted line is where trouble is. What do you guys think? There's nowhere to go, right? Does everybody see it? A close below the triggers puts me directly into the zone. Give me a Y if you see that. This is one of those things that always I'm like, grrr, it looks so good, but there's nowhere to go. My job is to have room. Look at that big extended move, and now they're coming back. The triggers are down. Whoops. Transition side of the triggers, and there is less than 2 points to get back to the zone. Just no room. Crude oil, triggers are down, nowhere to go down. And guys, this bar for 3 minutes and 53 seconds, if it finishes up, your small triggers will be up. If it finishes down, your small triggers will be down. Guys, if you don't know which way those triggers are going to be when this bar closes, it's okay to not take a trade. You don't have to guess. We're better than that. You're better than that. And there's crude oil. See, TradingView's trying to decide. Crude oil's trying to decide, guys, whether you are Rinko or whether you are TradingView, minute bars, you don't have rules met. It's okay to do nothing. I don't know what's going on in the wonderful world of crude oil, but they can't get their poop in a group, right? They were pretty strong off the open. Opportunities to make money. That's a good look. Did that one win? What did it look like? Holy smokes. Pull back to the area inside the triggers. Pretty amazing. All right, guys, I'm going to take another break. Price reaches yellow 1-to-1s. Oh, here's a good lesson. Here's a good lesson. Does everybody see how that looks like a clear path? Because there's not a yellow dot there. I didn't learn this lesson until 3 years into the software, guys. It looks like a clear shot. It looks like you can just shoot the gap and go north. Your synthetic fibs, your yellow 1-to-1s, and even your mid-band won't print until the close of the bar. So if you see that little gap, your path isn't clear. As soon as this bar closes, if they're going to continue, you'll see that dot. So this is a termination condition. This is price reaching yellow 1-to-1s. This is no triggers through. This is a rule number 2 not met. No trade scenario. Does that make sense? That's a good lesson. It took me 3 years to learn that lesson. And it was someone in the room that's like, dude, I've got a clear path. And I was like, that's not a clear path. Just little things that you learn and didn't even know you needed to learn. All right, guys, I will be back in about 5 minutes. Post them if you got them. Throw a million questions in the room. Let's finish this last hour strong. I'll see you in a few. We're going to play the awkward silence game if we need to. Triggers are strong. Path is not clear. Market, for whatever reason, can't seem to go any higher than 65.0375. Everyone in the room knew about it. You didn't have to trade into it. NASDAQ is going down strong. NASDAQ is going down strong because it's the same market, right? Potential to break. Pull back to the area inside of triggers. Down it goes. Crude oil finally breaks up. Gets right to trouble. Crude oil, the trouble on your chart on Renko was also there on TradingView. No reason to take a trade directly into it. NASDAQ, small triggers down. Transition side of the triggers. Room to the outer band. Does everybody see it? There's your line in the sand to take an entry below trouble. Guys, when I read my charts, that's how long it takes me to know whether or not I have a trade. That's how long it'll take you to know whether or not you have a trade. The path of least resistance. The easiest way to get to where you want to be is to not focus on the money, but to focus on the read, guys. Focus on whether or not you have the advantage of momentum if you're on NinjaTrader, right? Focus on whether or not you've reached an area if you're on NinjaTrader. Count the triggers when you get to the area, and if everything is right, look for a pullback to an area inside of triggers. That's your process. The process yields results. If you're on TradingView, which direction are the triggers going? Is this the best look? Is this the get ready to manage look? Is this the holy smokes, don't fight anything, don't trade anything look? Is there room to trouble? 2 entries. Is it going to be momentum because I have strong triggers? Is it a pullback to an area? Do I have to wait for a close on the correct side? That's the whole synopsis. That's what we do every day. That's what we talk about every day. What do you guys want to talk about? You want to just watch crude oil and see what it does? Cool. Let's take a look. I may be missing zones over here. Let's find out. So guys, if it ever doesn't line up, I'll click F5 and I'll reload. Let's see, Miss Jen. I need to make sure it's even on there, right? No, okay, it is on there. Zones. I don't know. Are you getting more than me? Let's try this. Let's see what it looks like if I follow the link. Ooh, that's the ES. I think I followed the wrong link. Is that NASDAQ? Nope, they're both ES. That's weird. Let's change it to NASDAQ. Yeah, I've got a lot of them here. That's NASDAQ. Does that look more like yours, Jen? Sure does. Alright, I am going to save it. I'm going to come over here And ta-da! We match. Thank you. Of course, now I'm missing it here, right? Which makes that look like the perfect short. F5. So we'll reload this one too, and we'll see what happens. Guys, you just got to trade your charts, though, right? Got to trade your charts. So I don't have that other one, Jen. From the transition side, though, these areas can create a bounce, and it is. Thank you for the heads up, though. Boaz, all the momentum, potential to break, pull back to the area inside of triggers, easy money, all the way down. Boaz, picture perfect. Picture perfect. Stops where the market shouldn't go. A little conservative on the first one. Protect your position. Hold the second. Nicely done. Those darn zones.